Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 25th of June. Starting with the FTSE 100, but yesterday managed to oblige us and hit that 8,300 initial target that we had. That was the early June resistance, and we hit that and then came back a bit. We've got the rising 50-day line. We've been above that for about a week now. We've got the floor of that rising trend channel from the end of December around the 8,200 level and above 8,200, looking for a retest of that rather mysterious spike that we had at the beginning of June, 83.71. The overall picture is that while we're above 8,200, we've got the rather unlikely prospect of hitting the top of that rising trend channel at 8,700 sometime during the summer, although obviously given the politics at the moment, that seems rather unlikely. On the downside, the worst we see at the moment is 81.10, which was basically May and June resistance. RSI on the right side of neutral 50 at 54, so that is helpful and suggests that we should hopefully remain above 8,200 for the time being. Moving on to the DAX, which gets the price from the worst looking, well, the second worst looking market actually at the moment. We'll come on to the worst one in a minute or two, but here, failures at the 50-day line there, 18,300, suggests that we're going to break the floor of that rising trend channel from back in September and then retest April support there towards 17,600. Early and end of day close back above the 50-day line would delay that prospect. The other reason for being negative here is that we've just had two RSI 50 failures, so you can see the kink in the RSI trace there, two failures below RSI 50, and that is also normally a leading indicator on the downside. Moving on to the Dow, which seems to be in a different world to the FTSE and the DAX. Here you can see more progress above the initial June resistance there, around 39,100. That leaves us looking at 40,000, which was the record level, and hopefully as high as 41,600, top of that rising trend channel from July last year. But at the moment, probably we're just looking at 40,000 because that would be a little bit excessive on the upside, hitting the top of that channel, and that's valid while we remain above the floor of the channel at 38,800 and the 50-day moving average as well. Moving on to Bitcoin, which has delivered our worst fears in terms of the breakdown below the 50-day line, the breakdown below that February uptrend line there, and also the prospect of hitting a March support line projection heading towards 57,000. It's a bit lower than that now. The 200-day line there at 57,000 is the most obvious place for this market to go, and one would expect that to happen, and also retest May support there just below 57,000. Even if we can then revitalize ourselves and head up. At the moment, ceiling on the market here looks to be 65 to 66,000, that uptrend line and the 50-day moving average. The only real plus there is that RSI has bounced off the oversold 30 level, so that does suggest that maybe we're within 24 hours of making a floor in this market. The last time we were this oversold was back in August last year, and obviously that started a rather large rally, so maybe there is some residual hope there. Moving on to gold, and here the situation is that we've managed to remain above the floor of the rising trend channel there from December. Floor of the channel there around 23.20. We still have the risk of 22.80, which is May support, but really want to see this market break through 23.80, which has been sort of double top there over the recent days, and or at least a breakthrough the 50-day line around the 23.60 level. But still a consolidation there. The ideal scenario is that we don't break down after the double, triple top that we've had there for that market. RSI still on the wrong side of 50, just below it, and so maybe worth waiting just to see whether we can get on the right side of RSI 50 and the 50-day line. Maybe on to the stocks, and starting off with quite a decent looking prospect, Beowulf, where we've had, after the double gaps down, a decent consolidation above a rising 50-day line, which is one of our favourite signals, and also we've broken back above the floor of the gap there, 45 pence, and recent initial June resistance above 45. We're looking for the top of that rising trend channel from December as high as 75 pence by the end of next month. Obviously a punchy call, but it's no fun if it's not a punchy call, I suppose, given the lay of the land there. Moving on to Clontarf, which, as I was saying in the weekend markets, tends to be a 1 or 2 day spike and then back down again. But here we're actually consolidating quite well. There was a bear trap rebound from below the 0.03 level. The current setup is a sideways shuffle, as I call it, sideways shuffle above a rising 50-day line, and that does suggest that we could actually spike up to the top of that broadening triangle there. 007 is the level, and hopefully do that by the end of next month. Obviously, we've got the 200-day line to contend with in the meantime, which at 005, but hopefully 007 will be seen by the end of next month. Ideally, we stay above the 50-day line there at 0.037. Moving on to another relatively obscure stock, which is Essensys here. Another potential broadening triangle base situation. Nice consolidation here, obviously above a rising 50-day line. And if you look closely, I think the 200-day line is starting to rise as well. That is a positive while we're above that at 27 pence, looking for the top of the triangle. 44 pence by the end of next month. But I think this situation has been called from the upper teens and has behaved very smoothly. Moving on to a requested stock, and its fundingcircle. I actually got bored of charting this. I think I was looking at this in the 40s and 50s, but then the novelty wore off. But here we do have a rising trend channel there from back in January. Top of the channel there, currently heading for as high as £1.20 by the end of next month, while we remain above the floor of the channel around the 83 pence area. So let's see if fundingcircle can do that. But a very strong looking chart in the sense that new support coming in above old resistance on the way up. After that bear trap gap reversal through the, well, at least gap reversal through the 50-day line that started off the rally back in March. But looking for £1.20 while we're above the low 80s on fundingcircle. Next up is a stock which I looked at the RNS this morning. I thought it wasn't that great, but the market seems to like it, or maybe it's relieved that it wasn't any worse. Here we've got a rising trend channel for Gear for Music, pushed above the 50 and 200-day lines there at £1.37, and looking for as high as £1.90 by the end of the summer, maybe up to August, something like that. Obviously, it could be rather quicker than that, but just looks as though today's announcement caught the bears off guard, and the shares pushing higher in a decent way. It's a bear trap anyway from below the April support there, £1.36, and while we're above that, quite confident of more upside. On to golden metal, which is going to be calling itself, I think, Guardian Metal very soon. But here we've got what looks like a mid-move consolidation within a bull flag. We've been looking for 32 pence for quite some time, looking for that by the end of next month. And the move higher today with the unfilled gap to the upside that we had earlier in the month suggests that there's plenty of momentum here at golden metal. And we also obviously have the 50 and 200-day lines rising very well. Upside value while we're above the 21, well, above basically the floor of the latest gap. Moving on to Jangada, which has been a bit of a horror story in the recent past, but just the first signs that we're breaking out of this falling wedge, which has been in place since January, and end-of-day close through 1.35, should take the shares up to at least the 200-day moving average at 1.75 by the end of next month, or even sooner. We had a key reversal to the upside yesterday, and that was also a bear trap rebound from below January support. So we're looking for the upside, especially while we're above 1.22 pence, the old January floor. On to Codal Minerals, where we're back in business in terms of the latest RNS. Another unfilled gap to the upside. We had one back in last month and a decent one today. We've hit, again, one of our targets, previous targets, 0.65 at the top of that rising trend channel from January, above 0.65, looking for up to 0.82 at the upper parallel of that rising trend channel, and looking for that by the end of next month, by the end of July, while we remain above 0.57. I suppose you might want to have 0.53 as a stop loss just below recent support, but we have bounced off RSI 50 as well, so that is why perhaps we had the gap up today and can look for decent higher prices. Onto a stock which few people have heard of, including myself, Kingswood, but looks like a falling wedge breakout through 11.3 pence and above the 50-day line. That was also a bear trap rebound for June, back above the March support of 9.5 pence. So looking for 18 pence by the end of next month, even though we've got the 200-day moving average in the way and we haven't been above the 200-day line since back in April last year. But let's see if Kingswood can deliver the goods. Onto a stock which I'd love to take the credit for, but haven't charted this for some time, and I can't remember when I did chart it, probably a few weeks ago. But the top of the triangle there, the broadening triangle there, was at 1.8 pence, and that was our previous target. And obviously at the moment, we're well above that. If you are a fan of the shares and looking for greater glories, then the next level up would be 3.2 pence, but that obviously depends on the fundamentals. But at least in terms of the charting, above 1.8, looking for 3.2 on Simec Atlantis. Onto Trellus, which I looked at a little while ago, a few days ago, I think, and here shares breaking out of that falling wedge, that triangle there, I suppose you could call it as well. 1.3 pence, the nominal breakout level in terms of the trend line, and looking for the top of the triangle there from back in March at basically 3 pence, and that could be hit as soon as the end of next month. Finishing up with Zanaga, and here, interesting chart in the sense that we've had gap close signal, so we gap down and then today should close above the top of the gap there at 6.6 pence. While we're above that 6.6 pence level, looking for the shares to break out and actually head up to the top of that rising trend channel from September at 13 pence. Obviously, it's a punchy call. If you're cautious, you wait for a break of the red resistance line there from December, 7.5 pence, before assuming 13 pence is on its way. That's it for me today. More updates tomorrow.